Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, November 29, 2023. Pardon my voice. I've been outside sawing wood. I got sawdust all over me, so I apologize. I'm a little late. I normally like to do this around 2 to 2:20-ish, but I was out doing some chores, well, upstairs, out in the back. So anyways, hope you're having a wonderful day. Hope you're not covered with sawdust like I am. And let's see, market's kind of a meh day again. Looks like, again, people are just kind of waiting to see where things are going. We did get some good news. GDP was upgraded for the third quarter. Also some bad news. We've been talking about Black Friday, and it appears it isn't quite as good as everyone would think when you dig in a little further. So, all right. Well, if it is your first time to watch Liberty Call, if you could do me a favor, if you could give some thumbs up, like, share, subscribe, follows, press the notification bell so you know when I go live. All right, let's go ahead and get into today's numbers. Dow Jones was flat, up 0.04%, 13 points, closed at 35,430. S&P 500 was down 0.09%, closed at 4550. NASDAQ down 0.16, closed at 14,258. The VIX was up 2.29% today. It's at 1298 right now. Canada up 0.4, Brazil was down 0.29, and Mexico was up 0.83. Over in Europe, Germany was up 1.09%. The UK down 0.43%. France up 0.24%. The Netherlands up 0.08%, Spain up 0.59%, Italy up 1.06%, Switzerland up 0.39%, and Portugal up 0.02%. Russian exchanges both red, MOEX down 0.71%, RTSI down 0.05%. And the overnights, Japan was down, or the Nikkei was down 0.3%, Australia up 0.29%. In China, the Shanghai was down 0.56%, the Shenzhen Component down 0.91%, China A50 down 0.71%, DJ Shanghai down 0.2%, Hang Seng down 2.22%, and the Taiwan weighted was up 0.17% for the day. All righty. So, like I said, kind of feels like everyone's just kind of waiting to see, waiting for that shoe to drop, the next black swan to appear. But, I guess we just have to wait and see. All right, market recap. Dow wins flat, but remains on track for big November gains. All right, Dow Jones Industrial Average closed flat on Wednesday, relinquishing some gains, but remaining on track for significant November growth. Optimism surrounding the economy's resilience and expectations of early year Fed rate cuts fueled the positive outlook. General Motors experienced a notable surge of over 9%. After revealing plans for a $10 billion stock buyback program and a 33% increase in its quarterly dividend for the upcoming year. Despite challenges, including labor strikes and scaled back electric vehicle plans because they're garbage, not because I'm not even getting into it. Analysts expressed confidence in GM's forward trajectory, particularly focusing on profitability and EV production. Yeah, EVs are going nowhere, folks. Do not buy one. In the technology sector, CrowdStrike Holdings saw a 10% rise as the cybersecurity firm provided a fourth quarter revenue forecast, surpassing expectations, driven by strong demand for its cybersecurity offerings. Intuit Inc. reported better than expected fiscal quarter results, resulting in a 2% stock increase. However, the company offered cautious guidance for earnings in the current quarter amid an uncertain macroeconomic backdrop. Dollar Tree gained over 4% following a revision of its full-year sales forecast and an announcement of a review of its Family Dollar business. Treasury yields continued to decline, building on the losses from the previous day. Federal Reserve Governor Christopher Waller's comments emphasizing the Fed's well-positioned monetary policy to address inflation led to ongoing optimism about potential rate cuts. Again, the financial journalists and the talking heads on TV have been cheering on, woohoo, rate cuts, rate cuts. They were doing that last year. So again, inflation's still bad. Yesterday, we saw someone using the term deflation. I haven't seen any deflation. So, until gas prices are back, diesel's around $2 a gallon, and 80% ground beef is back at $3-4. I'm sorry, we haven't deflated anything yet. We just get desensitized to it, and this becomes the new normal. The U.S. economy's third quarter growth was revised upwards to a 5.2% annualized rate, reinforcing the belief in avoiding a recession. Yeah, right. With the anticipation of fresh inflation data, the focus shifts to the Price Consumption and Expenditures Index. The Fed's preferred inflation gauge expected to show a slowdown to a 0.1% pace in November. In the oil market, U.S. crude prices rose as investors considered unexpected increases in crude stockpiles and supply disruptions in the Black Sea ahead of the OPEC Plus meeting where production cuts are anticipated. All right, so that's production cuts, things, everyone seems to think that inflation has just poof, gone away. I haven't seen it. Have you? I haven't. I mean, everything's still the same price at the grocery store as it was last week. All right, let's dive a little deeper into the GDP numbers. U.S. economy grows at 5.2% in third quarter. Higher interest rates sapping momentum. The U.S. economy exhibited faster than expected growth in the third quarter, expanding at a revised 5.2% annualized rate, up from the initially reported 4.9%. Despite the upbeat GDP figure, concerns arise as momentum is perceived to have diminished in the current quarter due to higher borrowing costs, impeding hiring and spending. While the recent report from the Commerce Department hints at a cooling economy in the final quarter of the year, it reaffirms ongoing expansion despite recession fears that have lingered since late 2022. The robust growth last quarter, the fastest in nearly 2 years, was driven by increased business investments in structures, particularly warehouses and healthcare facilities. State and local government spending also saw positive revisions. Residential investment improved, ending 9 consecutive quarters of contraction, thanks to a rise in single-family home construction. Consumer spending, a significant driver of economic activity, grew at a solid 3.6% rate, though it was slightly downgraded from its initial estimate of 4%. The dip was attributed to reduced outlays on financial services and insurance, as well as used light truck, likely impacted by the United Auto Workers strike. While stocks on Wall Street responded positively to the GDP report, economists note a potential cooling of growth in the current quarter. Retail sales fell in October, job growth slowed, and the unemployment rate rose to a nearly 2-year high of 3.9%. Oh my God. Trade data with a widening goods trade deficit in October suggests a possible drag on GDP growth. Slowing demand has led to expectations that the Federal Reserve might conclude its rate cutting cycle, with financial markets even anticipating a rate cut in mid-2024. Inflation trends lower, providing the Fed with a favorable scenario to potentially end its rate hiking campaign without inflicting significant harm on the economy. Well, I think that's probably too late, but it's good to have hope and, wish for things that will never happen. I mean, hey, let's print a bunch of money 3 years ago and we'll have no inflation. I also used to believe in Santa Claus too. So, I mean, people in government believe in fairy tales. All right, last up, article from Zero Hedge titled Black Friday Dud. Retailers heavily depend on shopping frenzy. Day saw a sales drop. All right. Despite the initial cheer surrounding record online sales on Black Friday, a new Bloomberg report suggests that major retailers fell short of expectations on this year's most crucial shopping day. According to an analyst of Bloomberg's second measure transaction data, the median decline in Black Friday sales was around 4% for a group of 40 companies, with a higher percentage of year-to-date sales from the shopping holiday compared to their peers. The data indicates a steeper drop than Black Friday 2022. Bloomberg's second measures data is derived from sampling of millions of U.S. credit and debit card users, and the retailers in focus heavily depended on Black Friday. The report noted that Black Friday represented more than 5 times the average day's worth of observed U.S. direct-to-consumer sales to date, end quote, emphasizing increasing resilience in the retailers on the specific shopping day. Despite conflicting data from Adobe Analytics, which showed a 7.5% increase in online Black Friday spending compared to the previous year, Bloomberg's analysis suggests a shift in consumer behavior. Consumers may be gravitating away from traditional Black Friday retailers to discount retailers or redirecting their spending towards experiences and travel purchases. The data from Bloomberg's second measure indicates a rising sales for discounters like Walmart, TJ Maxx, and Marshalls. Even Amazon reported record-breaking sales to kick off the holiday season. However, for many other retailers tracked by Bloomberg, Black Friday saw double-digit declines. The report suggests that consumers may have traded down from traditional retailers to discount ones on Black Friday, potentially influenced by economic factors. To the use of buy now, pay later services at discount retailers, as highlighted in the report, could be a sign of economic challenges for certain consumer segments. If this trend continues, it may have implications for retail landscape heading into 2024. All right. So everyone was excited the other day that, I think I commented, I was like, well, how do they know that it's already, the Black Friday weekend didn't even technically end until Monday evening. So it's like, how did they know all these numbers are higher? Well, now digging in a little deeper, you can see that people are, while spending is up maybe 7.5% for Black Friday, people are shifting where they're buying from and probably getting better deals, for now. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.